Hi there, welcome to Kneppy Invest. About 1 hour to go on this trading day, the 23rd of April 2024. Overall, a pretty good day on the market. Not quite as good as what we saw on the American markets, but we had the good day yesterday. They had their good day overnight, and a so-so day today, although the XGO is up 0.44%. Small caps down, resources down, and I'm pretty sure gold is down quite big. So we'll have a look at the best performing sectors and indices when I have a look at the ASX today, or what has happened on the ASX today. Also have a look at the best performing and worst performing companies. And based off that, I will choose the 5 top announcements of the day. I haven't decided yet. I have a feeling a few of these companies that are among the potential list will be in that top 5. Yes, I'm looking at you, Alice Pearls, maybe even Select Harvest, but definitely Atlas Pearls. I expect that company to be one of the worst performing companies. Before we have a look at the ASX today, completely forgot, I will show you some interesting news that I did see in a tweet earlier today. And it's intriguing, fascinating, potential news. It is news, but potential happenings on the New York Stock Exchange. I'm not sure whether it's good news or bad news. I'm slightly erring towards it's not as good as what some of you might think, because I do joke about wishing or wanting the stock market to be open 365 days a year, 24/7. Yes, it's in relation to the possibility of that happening in the future. So have a look at that tweet. Have a look at these announcements, 5 top announcements, and then any company that hasn't made it into that list, have a look at some of those announcements. So about 10 there or so. We're still in Appendix 4C season, Appendix 4C and 5B month. So quite a few of those announcements to possibly have a look at. And then I suppose we can finish this particular video looking at some charts. And one of those charts I'm definitely going to look at is gold, because gold at the moment is looking the weakest it has for a while. And that is based off just the 1 hourly chart. Okay, so let's start this particular video looking at the tweet. This really interesting tweet from Kobayashi Letter in regards to New York Stock Exchange, just considering a proposal for 24/7 trading. This is according to the Financial News, which will bring it in line with the crypto market. And that is one thing I have found a little bit different, subtly different, between the crypto market and the stock market. Is crypto market is open all the time. Stock market is not. It's open for a limited amount of time, for about 6 hours a day, so about 25% of the day, and only 5 days a week. And I'm pretty sure even the crypto market is open on weekends. So maybe that's what the New York Stock Exchange is thinking about, is bringing themselves more in line with the crypto market. And at this point in time, I'm not so sure it's the best thing to do. I do like, even though sometimes I do joke about, I do like that it is only open 5 days a week and only open 6 hours in a day. I think maybe for the American markets, it might be open for 6.5 hours. I could be wrong, because I'm pretty sure they open at 23:30 local time and then close at 6, so 6.5 hours. So this is interesting news, and 2.7 million views. So it's gained some traction, this particular tweet. And yeah, 648 replies, 1.7 thousand retweets, 5.4 thousand likes, and 509 bookmarks. So some people like, well, maybe not like it. Maybe they do like it. I don't know. I'm indifferent to this particular news. I'm pretty sure it won't happen on the ASX, because we're a little bit backwards in that regard. And when I say backwards, I just mean, in my view, Australia can be backwards in many aspects in our lives. But when it comes to financial innovation, we're actually the forefront of financial innovation. Anyway, I'm starting to ramble on a little bit. Okay, so let's have a look at the ASX today. So overall, a pretty good day, but let's have a look at the different sectors and indices. And I'm pretty sure best performing sector. Should I zoom in on this? Let's zoom in on this. Best performing sector is IT, up 1.4%. Healthcare, real estate, and financials all doing fairly well. So they're doing all the heavy lifting today. Utilities coming in behind them. Staples and discretionary fairly flat, particularly discretionary. But industrials down 0.71%, materials down a little bit, and energy down as well. And if you look at the different indices, By far the worst performing indice is gold, and that's not a surprise. Quite a few of my gold companies are down a little bit today. So the All Ordinaries gold down 3.85%. Is there any other sector doing or indice doing badly today? Industrials, yeah, we already know that. Energy doing not going that great as well. And there is a reason why gold is down big. So let's have a look at why gold is down big by looking at the chart. And this is the 1 hourly chart for gold. And it's been an uptrend since February. In fact, there was a couple of periods in February and March where gold was going flat, just consolidating. But just based off this 1 hourly chart, it's been in an uptrend since the middle of February. So we are talking about 2 months ago. And it's moved up from about $2,000 up to about 2,300. But if we just zoom in what's happening now, we are seeing a little bit of weakness. A couple of days of weaknesses, or a couple of days of being weak. So it's fallen from 2,400 down to 2,300. Nice little bounce in the last 3 hours, but we did see a big down hour at about 11 a.m. local time. Gold in that 1 hour fell 1.45%. So just based off this 1 hour chart, I'd be probably bearish in the short term around gold. We need to see a little bit of rally in gold. And it also fell through this little support level. So it's a weak support level, but nonetheless, it's there because gold has bounced off this support level, about 2,320, a few times in the past. The support level began 8th of April. In the past 2 weeks. Yeah. So gold is looking the weakest it has for a while. And if you look at the daily chart, in fact, we've had 2 negative days in a row. So was down big yesterday, down about 2.75% and already down 0.65% today. But this could be just a little bit of a correction and maybe nothing to be too concerned just yet if you're in gold for the medium to longer term. But maybe if you're in the short term, maybe it's now time to take some profits in your gold companies. Okay, so that's why gold is having a bad day. And otherwise, looks like Bitcoin's had not that bad. In fact, I'm pretty sure Bitcoin looks pretty good on the 1 hourly chart. Yeah, Bitcoin looks pretty good on the 1 hourly chart. Copper may have had a bad day today. Yeah, copper's not looking like gold. So just based off what I'm seeing here in the 1 hourly chart, just a little bit of a correction, but nothing to be concerned with. Nickel up to 3.5%. Oil's up. And something's up big there. That is natural gas. Up 15%. What's happened there? And tin's down 3.4%. Anyway, so now let's have a look at the best performing and worst performing companies on the ASX. I'm pretty sure I do know a few of the worst performing companies. So let's have a look at the top performing companies, and I'll come up with a top 5 announcements of the day based off share price performance and based off what I know of these announcements. So the best performing company today is Osteopore. I don't remember this company releasing any announcements. So what I'm going to do is just open up this particular announcement or this page for Osteopore. And if they release any announcements, this will become in my top 5 announcements. No. In fact, response to ASX price query, they did release an announcement, but it was marked non-price sensitive. First, in-human clinical trials begin in Singapore. Share price took off. Then they went to trading halt because the ASX is asking Osteopore, why is the share price rising on great volume or higher than normal volume? And more than likely, Osteopore has said, well, we just released an announcement this morning and you said it's not price sensitive, or maybe Osteopore said it's not price sensitive. So at this point in time, Osteopore won't make it into my top 5 list, but I might have a look at that particular price query just to see if anything is in that. Now, Zoono up 17.5 or 65%. Potentially this is in the top 5. However, Zoono Group is illiquidly traded, only $4,462 turned over, but they did release an announcement. So maybe I'll just touch upon the announcement, but more than likely Zoono Group will not make it in the top 5. MedAdvisor might, up 14.28%. The company did release an Appendix 4C. I had a look at it and went, didn't really float my boat, but the market is thinking differently. And now let's have a look by market cap. Healthco Mesoblast, I don't remember Luca releasing anything. I'm pretty sure Healthco did. I'm pretty sure they're doing a share buyback. Yeah, there we go. Notification of a buyback. So the market likes that. So I've already looked at the announcement for that company. Anyway, I actually will have a look at the chart for Healthco, Healthcare and Wellness, Imatep, Veeam. Nothing here where I remember the company releasing an announcement. So maybe I completely missed it, but nothing there apart from MedAdvisor. So possibly MedAdvisor will make it into the top 5 announcements of the day. Now let's have a look at the top losers. And I have a feeling Atlas Pearls is at the top. Yes, Atlas Pearls will make it into the top 5 announcements of the day, even though the share price is down 32%. Possibly it will be number 1. So have a look at Atlas Pearls. Vitura, yeah, we'll have a look at Vitura as well. Not sure when they'll come in. Share price down at 25%. Anything else here? Lifestyle Cycles, Lifestyle Communities. So that should be in the top 5, down 15.4%. The very fact that company has a market cap of 1.5 billion, the share price down 15.5%. And I'm pretty sure the company released a trading update today. So that will come in at number 2. So even though the stock market is up today, the worst performing or the most interesting announcements have been released by companies where the share price has dropped a fair bit. So let's have a look at by market cap. Anything else here? Emerald Resources, Lifestyle, or Abounda. So some gold companies there. There is Select Harvest, down 10%. So that is going to get into my list. Might be coming in number 3. We'll put that in number 3. And anything else there? Nothing. There's Vitura. Okay. So I've come up with the top 5. Atlas Pearls coming in number 1. Lifestyle Communities at number 2. Select Harvest at number 3. We'll put in MedAdvisor at number 4, something positive, and then Vitura Health coming in number 5. Some of the other announcements I will go through include Brambles, maybe Strike Energy, Northern Star released their quarterly update, but the share price will be down. Mitchell Services released an update. Plenti Group, 29 Metals did make it in here, but sorry, that's the second time the phone has rung when I'm doing a video in the last week. And that last week was the first time it's happened since I've been doing this channel. Anyway, maybe I should turn down the what do you call it? The volume before I start recording. Anyway, so 29 Metals, AMI, I think that's Aurelia, Chrysos Corp, company with a ticker code MAP. And I'll maybe go through some of these announcements just to have a look at how the market has reacted and whether I like them or not. So we have about 10 to go through there. Anyway, so now let's start with the top 5 announcements of the day, starting with, we'll start at number 5. There's Step On Clothing, up a little bit today. Starting at number 5. So that is Vitura. So someone actually did ask me a question about Vitura a few weeks ago. And to be honest with you, this is not a high-quality company. This is a pretty low-quality company. They were talking about increasing competition, which was suppressing margins. So this company's into marijuana. They sell stuff. And the one thing I do remember is increasing competition, decreasing margins. So even though this company was profitable and even was giving their shareholders a dividend, things were under pressure with this company. So definitely no moat, no competitive advantage, it seems, when it comes to Vitura Health. And they did release an announcement, and that's why the share price is down 21.8% today. And this was in regards to a service agreement with Code for Cannabis. So the market doesn't like this. And when I actually did read this announcement, it didn't sound good. So the board of Vitura Health, a leading digital health platform business, so yeah, marijuana, advises that he has received confirmation from Code for Cannabis of its intention to terminate its service agreement with Vitura's wholly owned subsidiary CanView to be effective from 29th of April 2024. Now, I thought about maybe taking action or something against C4C. So Vitura and CanView have now issued proceedings to restrain C4C from withholding services. The proceedings will be held in the Supreme Court of Queensland in Brisbane on Friday, 26th of April 2024. And they also mentioned here something about material disruption to Vitura's operations. So it is likely that there will be a material disruption to Vitura's operations, which may not be fully addressed by the implementation of its business continuity plans. So I can understand why the share price has been sold off. In fact, I thought maybe the share price would have been sold off even more by this announcement. So not good announcement from Vitura Health. And that's why the share price is down a lot. So let's have a look at the chart for this company. And we'll focus on 1 hourly and daily charts, maybe weekly charts. Yeah, so in fact, the share price went below 10 cents in the first hour. So there was a fair bit of negativity in this announcement to begin with, and the share price has bounced, which is sort of interesting. So let's have a look at the 1 minute chart. So the share price hit its low at 10.15. That low was 9.2 cents. So if you bought on that particular low, you've actually done fairly well. You've actually gone up 28 cents, so almost to 33% since that low. Anyway, daily chart looks absolutely horrible for this company, and this sort of news does not help. Share price has been a downtrend for at least 1 a year or close to 1 a year, and it's been going down. In fact, the share price has decreased from a high of over $1 back in October 2022 to current share price of 12 cents. Now, again, this company is profitable, but potentially this particular thing that's happening to them might be negative in terms of financial performance from this company. So market cap 92 million. Revenue the last few years has been growing quite substantially, but it does look like that revenue growth has come to an end. If you look at the last 3.5 years, its revenue's flat and profit's been going down because of decreasing margins, increasing competition, that sort of thing. This company needs to find a moat, and more than likely they haven't found one. And I think it's going to be hard to find one. What competitive advantage do they have over their competitors? Big question management have to ask themselves. If they can't find one, they're just going to have to live with really bad margins. And if maybe they could survive doing that, who knows? Coming in at number 4, we have MedAdvisor. This company did release their Appendix 4C. Market has liked it. Share price up 13%. Here, they don't announce it as the Appendix 4C, but this is an Appendix 4C. So third quarter, financial year 24, MedAdvisor quarterly update. I'm intrigued to see that the market has responded positively. I didn't see as much positive in this particular Appendix 4C than what the market thinks. Now, MedAdvisor receipts are highly seasonal. In fact, maybe I can show you their receipts history. Okay, so let's go straight to the Appendix 4C, or the quarterly cash flow report. Maybe you have to zoom in here. So receipts to customers, fairly high amount of receipts, $34.5 million of receipts, but the company was operating cash flow negative. And if you look at the 9 months or the first 9 months of the year, the company is operating cash flow positive, all because of the December quarter. So receipts seem to peak in December and then fall away. And I think the March quarter is the second best quarter. So the company not operating cash flow positive in this quarter, which means they're not free cash flow positive, but a lot of receipts happening. They probably mentioned something about revenue. So revenue 24.2 million, nice increase from the third quarter or the previous corresponding period, up 42%. Gross margins up 48%, and gross profit up 48%, and gross margins up 2.6 percentage points. So if you do compare to the previous corresponding period, this was actually a really good quarter. If you compare to the last quarter, not so, but we do know there is a bit of seasonality. So maybe I'm being a little bit unfair on this company. United States, they are growing at a nice rate. For those who don't know what this company does, here it is. Global leader of pharmacy-driven patient engagement solutions that provide individualized patient experiences to help remove barriers of care. I'm pretty sure it's some sort of app where people can order or do stuff with their pharmacy stuff. Yeah, I'm pretty sure they made a pretty big acquisition a few years ago as well. So the market likes it. Let's have a look at the chart. Actually, before we have a look at the chart, let's have a look at the receipts history for this company. Let's go to MDR. There it is. Okay, so MDR, if I just copy that, I'm going to do a chart on the fly. Here we go. Not sure why. What I'll do is get rid of these. Not sure why we have nothing here. Okay, should be able to see the seasonality when I do or finish this chart. This is very exciting, doing this on the fly. Quarter receipts. Don't think we have to do a really good job with this, I suppose. Many quarters of receipts. We go to insert. And we'll go to some of my favorite charts and go that one. There we go. And the last thing I like to do is just to increase the width and increase the font size of the numbers. If I can find it, there we go. And just to bold it too. Okay, so a really nice increase in receipts over the past 3 years. So I'm pretty sure that has to do with the acquisition this company made. And we can see a massive peak in receipts in the December quarter 2023, and then another massive peak in receipts in the last December quarter. So there does seem to be a bit of seasonality there. But even though there is a little bit of seasonality there, you can see a massive drop in receipts from the December quarter 1 year ago, went all the way from 41.2 million down to 17.1 million. This decrease in receipts, not as great as what happened last year. So possibly the market is liking that. Maybe the market expected a bigger decrease in receipts for this company. And in fact, if we go back to their last quarter, let's go back to the last quarter, you can see if they had that sort of quarter every single quarter, this company would be ridiculously undervalued right now, because this was an absolutely epic quarter. So $42 million of receipts, and the company was operating cash flow positive in this quarter, one quarter, by $15.2 million. So it seems like in the year, they are operating cash flow positive by a large amount in that December quarter, and then operating cash flow negative the other 3 quarters. So they need to make all their operating cash flow in that one quarter. Maybe things will turn around. Maybe the company will lose that seasonality, or that seasonality will be gradually smoothed out with time as the company becomes bigger. Now, this company is not small, has a market cap, I'm thinking around 150 million. It's pretty high, 167.8 million. But the market does seem to like this company to a certain degree. Now, the chart, not the best chart, does go through these little boom and bust periods. So this is the daily chart for the company. And at this point in time, share price not doing much at all. You can see back in start of 2022, share price went from 40 cents all the way down to 14 cents. Then they had that good period between late 2022, start of 2023. Then the share price drifted off. And the top of that good times was just around the time they released that December quarter Appendix 4C. And I thought that might happen again, but it really hasn't happened. You can see the share price running up into the release of their Appendix 4C for the December quarter, but the share price hasn't pulled back like it did last year. So possibly this is a company to pay attention to. Possibly. Okay, so that's MedAdvisor coming in number 4, and probably the only positive announcement out of these 4. Coming in number 3, we have Select Harvest, an almond, or almond, I should say, company. And I actually did tweet this one, a business update. And there's one thing I don't like about this particular business update. So again, this is an agricultural company. Some positives out of this, I did find some positives, some negatives as well. So they commenced the harvest 2 weeks earlier than normal due to favorable growing conditions with the aim of maximizing farm hygiene. We are now more than 50 or 95% through the harvest shaking operations based off some stuff. Their crop is going to be between 28,000 megatons, million tons, and 30,000 megatons, million tons. Whilst, this is the most important thing, whilst potentially below our original forecast, it is still on track to be one of the largest crops Select Harvest has ever produced. Now, I do think companies, when they are issuing forecasts, should be quite conservative because the market hates forecasts that aren't hit, and they really like forecasts that are not hit on the upside. So they love upgrades and they hate downgrades. So I just wish more management were a little bit more conservative with their forecasts. So in this case, they were not conservative. They just went, "Well, we think we're going to hit this number, even if some things might go wrong. So be it." And I just think they should, when they do a forecast, just think of the things that could go wrong. It seems to happen all the times when just a little thing that goes wrong could really mess up their forecast. And this is what happened with Select Harvest. So their forecast is a little bit lower than they thought. Talking about weather conditions, whilst not perfect, have been considerably better than recent years. They also talk about market conditions of the almonds in California, showed reduced shipments for both export and domestic markets. But they also mention something about, with the lower US crop receipts, current global almond market conditions and year-to-date shipments continuing to outpace receipts, US inventory levels have decreased. But at this point in time, it doesn't sound that bad. But current pricing, I think this is another reason why they missed their forecast, but also the pricing here. Select Harvest 2024 sales program is well underway. However, this is the most important thing. Since October 2023, we saw consistent market price strength. However, spot market prices have softened recently following the 2024 US almond bloom, completed in generally positive conditions. So it does look like there's a little bit of weakness in almond prices right now, and that could be another reason why share price is down. And right at the bottom of this particular section, given this recent softening, Select's forecast 2024 crop price based on our crop profile is in the range of $730 to $750 per kilogram. So more than likely that is down a little bit from where the market expected it, and that's why the share price of this company is down. So below forecast production, and prices are probably a little bit lower than what the market expected or anticipated. So the chart for Select Harvest is an interesting one. It looked really bad for a period here. Share price got down to $2.80 back in January. Then it took off because they released some positive news back in late January. Share price looked like it was trying to move into an uptrend. And what's happened now is this particular announcement has really put an end to the potential uptrend in Select Harvest. Although leading up to this particular announcement, share price was under pressure, dropping from $4.50 down below $4. So it seems like maybe the market was aware this might happen when it comes to Select Harvest. So share price down about 9 to 10% for this company. Okay, next company coming in number 2, we have Lifestyle Communities. Company I don't know much about. They do, I'm pretty sure something to do with retirement homes or something, maybe something like that. I have no idea. Lifestyle Communities trading update. Yes, I look at all trading updates, even if it's for companies that I know nothing about. So I did open up this and I just started reading it. I went, I'm not going to bother. I'll just let the market decide whether this announcement is good or bad. And it's pretty obvious it's a bad trading update. And you can sort of tell what this company does just by reading this. And I just remember them talking about selling stuff, selling houses or units or something like that. So Lifestyle Communities currently has 432 new homes that have either been settled or will be construction complete and available for sale before 30th of June 2024. When we announce our half-year results, we expected circa 350 homes to sell in financial year 24 based on pre-sales we had at the time and the experience from prior years. Subsequently, the Beachside and Northwest Melbourne locations have been slower than predicted. So now we see why the market is selling off. The market doesn't like to hear or read slower than predicted. Again, this is another company that should have been more conservative with their forecasts. And you can see the share price performance of a company. Now, if they were more conservative, I don't think share price would have been that different. I don't think the market reacts to forecasts as much as it negatively reacts to forecasts being missed to the downside. So they're probably talking about some numbers here. I'm not going to go through that, a lot of numbers, but this disappointed the market and the market has sold off. Now, if I remember correctly, the chart for this company was not looking that strong anyway. not the sort of company you want to be in. In fact, the share price was in a downtrend, started a downtrend. Before that downtrend, it was moving flat or going sideways, sort of consolidating. And I did put in 2 lines here. So these 2 lines, these dashed lines, was an area of support for lifestyle communities. And it's fallen through that support level on strength. And boy, it's strong. So straight through. So hopefully no one bought the last few weeks, because it has been in that support zone for about 2 weeks. Hopefully no one bought during that period, because share price has broken out to the downside. And this is after a bad announcement. Looks like they released an announcement in February. That would be on results. Share price on that day dropped 12%. And just by looking at the chart, unless you're really beholden by this support level, no reason to be excited about this company unless you think there's value. And I have no idea about this company. No idea if there's any value, but the chart's pretty good. And I'm pretty sure this company has performed really well over the last 10 years. Well, between 2013 and 2021, it performed fantastically well, but now not the time for this company. So is it high quality, low quality? I just don't know. I've done no research on lifestyle communities. If you do look at the annual numbers, last 5 years, some nice margins. So that's lifestyle communities. And finally, let's have a look at the top announcement of the day, Atlas Pearls, down over 30%, just over 30%. Low today was 10.5 cents. So this has been a successful trade. So I have done a video, I will do a video on this particular trade I made with Atlas Pearls, and I have to give this particular trade an A+. So when I originally developed the video for this, I haven't recorded it yet. I gave myself, I think it was an A or A-, but now definitely an A+. I'll talk about that why. And this was an absolute, almost a perfect trade. So Kobe, auction, is that Kobe? Is that how you pronounce it? Kobe? Auction result and March quarter sales update. I saw this announcement and went, oh, have I made the right decision? I thought I had, and it has been confirmed. I did make the right decision on taking profits when the company released their financial results in February. So this is a pearl company. For those who don't know, this is a pearl company. They grow South Sea pearls in Indonesia. I think it's South Sea pearls. I could be mistaken, actually. I could be mistaken, but pearls. We'll just say I was going to say manufacture pearls. You know, they grow pearls, and the pearl market or pearl prices were really good for about 6 months last year. We saw pearl prices go through the roof. This was based because some famous people in China were wearing pearls or something, and social media just went off, and people just fall in love with pearls because these famous people were wearing pearls, something ridiculous like that, and the pearl market or the pearl prices just went through the roof. And I knew that was going to end at some point, and I had a really hard time finding pearl prices. It's really hard. These auctions don't happen all that often, and I just thought the top has been reached here. Now's the time to sell. When they released their full-year results or half-year results, the results were really good, but the market didn't react all that well. I expected a better reaction, but the market is a little bit more savvy than what I give it credit for. Anyway, so this particular auction was not that great. They said at this point, there's one point here, the company formed the view that prices submitted did not reflect the true worth of the goods being offered. The company therefore chose to set bids for only 68,000 odd pearls at an average price of $68.60 per piece. It was over $100 in the last auction, $112 in fact. And there's a nice little graph, and here it is. Average sold the last 5 auctions. You can see it climbing. So over $100 the last 2 auctions in 2023 in September and November, back down to $68.60. Still higher than a year ago, but the peak in pearl prices has come to an end. They talked about sales strategy, potential impact on 2024 revenue, that sort of thing. Have not gone through that, and sales result. Now, here we go. Sales sold. I like this sort of table. So here we go. First half, and it's still a lot of revenue coming in, but what sort of revenue, profit this company was making in the last half of 2023 probably, or more than likely, has come to an end right now. That's what I'm thinking, and that's why I decided to get out. Why is people trying to get in contact with me? I thought I'd decrease the volume. Stop trying to call me. Anyway, so that is the... No, let's go through the chart first. Stop annoying me, people on the phone. So let's have a look at my trade. And you can see that on the daily chart here, not the weekly chart, the daily chart here. So I bought at 5.7 cents back in September. And that was when, around the time when I realized the pearl market was seeing some interesting action. So I bought at 5.7 cents. And at that point in time, the share price of Atlas Pearls had moved into an uptrend. So I saw what was happening in the pearl market. I saw the share price reacting, and I thought, I'll buy some shares at 5.7 cents. And my idea at the time was to get out when the company released their results in February, because the results would be good, and they were good. So I sold on the day they released their results at 20.5 cents. That was not quite the peak, but it was close to the peak. The peak was just before the results, when the share price got to about 22.5 cents. But you can see the share price has almost halved since then. So a pretty successful trade with Atlas Pearls. So that's why I'm giving it an A+. At this point in time, the share price is starting to look pretty weak. If we do have a look at the 1 hour chart, the hourly chart's going to look pretty weak. In fact, just based off the hourly chart, the share price moved into a 1 hour downtrend back in March at about 18 cents. A nice little rally at the start of April, but that rally has come to an end. Okay, so that's the top 5 announcements of the day. I was going to go through some of the other announcements. Brambles released a trading update, share price down 5.92%. This was unlucky not to make it into the top 5. So the market has not liked this particular trading update. I'm not going to talk about it all that much, but let's have a look at the chart. And the chart for Brambles was looking pretty good, not so good now. This is the 1 hourly chart. It's now moving into a downtrend. It was in an uptrend. Now it's been broken. Even the daily chart is starting to look, well, yeah, it was a beautiful uptrend, short-term uptrend that's lasted the last 2 months. Now, I think the positive momentum, positive sentiment in this company has been broken, particularly when you look at the 1 hourly chart. Okay, so that's Brambles, a negative trading update today from the company. Let's have a look at Strike Energy. So down 2.33%. This company released their quarterly report and Appendix 5B. So have a quick look at their Appendix 5B. Now, this company seems like they're just into production because if you look at the cash receipts history of this company, it's just popped up all of a sudden. So about $3 million in cash receipts last week. Why does CommSec take so long to open announcements? If I go to ASX announcements, I go to ASX announcements, they would open up this announcement in like 1 second, literally 1 second. I'm going to have to find it first. It's probably opened up by now. No, it's still opening. This is going really bad if I find it and then open it up. Here it is. Let's have a look. Oops, got to agree. Here we go. There it is. Look, less than 1 second, and CommSec still opening it up. This is CommSec. It's not this my internet access. It's CommSec. So get with it, CommSec. Anyway, so let's go have a look at the Appendix 5B. It looks pretty good at this point in time. So cash receipts up to 21.9 million. You can see the 9 months to date, only 25 million. So it's gone from 3 million in cash receipts to 21.9 million. Now they are operating cash flow positive by 14.6 million, which sounds absolutely amazing. However, they are still spending a lot of money on exploration and evaluation. You can see that in section 2, $31.9 million in exploration and evaluation. So not quite cash flow positive in terms of the whole business just yet, or maybe even free cash flow positive. Now, free cash flow positive technically is operating cash flow minus capital expenditure. In that instance, capital expenditure of this company was only $36,000, so they were free cash flow positive. But I like to include exploration and evaluation. That's a real cost. So they still have a fair bit of cash, $44 million of cash on hand. And the market cap of this company is pretty high. I'm pretty sure it's about 600 million. 600 million. In fact, We can look at that by the chart. So let's have a look at the chart for Strike Energy. So this is hourly chart. In fact, the hourly chart looks weak as. So I suppose the daily chart doesn't look that strong. Something negative has happened to this company. You can see I don't follow this company all that much, but there is. So you go to the lows there. It's right at the lows we saw, the last two lows we saw back in February and also back in September 2022, but a little bit higher than the lows we saw back in 2021. So the daily chart looks pretty ugly and the 1 hour chart looks pretty ugly. So no reason to get excited about Strike Energy right now, just based off this 1 hourly chart. Okay. Another company that released an interesting announcement today. I won't have a look at Northern Star. More than likely, Northern Star is down a fair bit today because of weakness in the gold market, and Northern Star is down 4% today. But they did release their quarterly report, so have a look out for that. Mitchell Services down. They released a quarterly investor update. Now, this company looks cheap, but it's looked cheap for. Why did Comsec open this announcement up really quickly? Just don't understand. This company has looked cheap for many, many years, and that is a concern. The company has looked cheap for many, many years. And in fact, I'm pretty sure I've done a video on this company in regards to, is this company the cheapest company on the ASX? So quarterly revenue of 59 million. Quarterly EBITDA, these is quarters, by the way, not 4 years. Quarterly EBITDA of 10.5 million. Quarterly operating cash flow, 9.4 million. Now, that's not free cash flow. That's just quarterly cash flow. And further net reduction of 13% to 7.9 million. Analyze return on invested capital, 16.2%. I like that number, but the market doesn't like it. Share price down slightly. We'll say down slightly. The other thing I'd like to look at for this company is our average operating rigs. So this is a drill company. So average operating rigs up slightly and number of shifts down slightly. But otherwise, a much better quarter than last year, particularly when it comes to operating cash flow. Now, I mentioned that this company might be one of the cheapest companies on the ASX, and it's been like that for many years. So remember, operating cash flow in the 1 quarter was 9 million. Market cap of this company is 88 million, so below 100 million. So if you analyze that quarterly cash flow, that means this company is operating on, and analyze something. Analyze 1 quarter is a fool's errand. So if you analyze it, that's $36 million of operating cash flow for the whole year. This company is operating or trading at 2 and a bit times operating cash flow, which sounds ridiculous. Now, this company was on one of my watch or trading watch lists because of the chart. So the daily chart's starting to look interesting, and the share price has broken out of this long-term downtrend. So this downtrend began way back in 2019. This is this sloping dashed line. So it's hitting all the peaks, almost perfectly all the peaks. And it broke out a few weeks ago, in fact, a month ago. The daily chart looks interesting. Looks like it's trying to break out. Increasing volume. That's the other thing. Really good volume coming in, particularly since the start of the calendar year. And the 1 hour chart is looking interesting as well. Nice little pullback. Nice little pullback. So the chart looks interesting. Well, all the charts look interesting for this company. And this result looks interesting. But this company has always looked cheap. And maybe there is a reason behind that. All right, so it's Mitchell Services. Plenti Group released the trading update. Share price up 4.84%. Delivers record cash NPAT. So this company is profitable. However, I'm pretty sure this is a lending company, maybe to SMEs. And I can tell you exactly what it does. FinTech lender. We provide faster, fairer loans by leveraging our smart technology. Loan originations have grown consistently, yes. But this sector has been absolutely decimated. The market absolutely hates this sector, sort of the smaller lenders. And maybe this is a sign things are not as bad as what the market thinks. But let's have a look at the chart for Plenti, not Playside, Plenti. And the daily chart, we'll start with the daily chart for these. Oh, I remember there was something, this company had a deal with someone big, if I remember correctly. Let's have a look at the 1 year announcements. So this deal was back 28th of November. Proposed issue of securities. Where is it? Oh, Plenti and NAB strategic partnership. That's why the market got excited. That's why the share price went on a tear. Share price since then has gone sideways, maybe consolidating after the share price was in a long-term downtrend. Look at this downtrend, massive downtrend, and looks like possibly that downtrend has come to completion. I even put in a support level at about 32 cents. Now the share price is 65 cents. So let's have a look at the 1 hour chart. Share price just going sideways. So nothing to get too excited on the 1 hour chart for Plenti Group. A nice result or nice announcement from the company, but nothing, no breakout. 29Metals released their quarterly update as well. Share price down 5%. I'm not going to go into this. However, the one thing I do remember by going quickly through this report, cash fell a fair bit. If I remember correctly, cash fell. I'm gonna. My memory's going here. Should be a nice little. This is it right here. So cash on hand at the beginning of the quarter was 162 million. This is group cash and cash equivalents. From 160, cash on hand fell from 162 million to 106 million. Now they have had some problems with their Capricorn project near Mount Isa because a lot of rain again. Golden Grove was operating cash flow positive slightly, and Capricorn was operating cash flow negative, which by 33 million. So still some problems with 29Metals. I'm not sure if the down day for this company was because of this quarterly report or just some weakness in copper. But this is the daily chart for 29Metals. And daily chart is still in a downtrend. Hourly chart, yeah, it has been looking good at times. There was a nice little uptrend here developing the 1 hour chart, but that fell through on the 26th of March. It was trying to recover again. Looks like a bit of a double top. Bit of a double top there with 29Metals, and now the share price is not going up. So not the chart for me when it comes to 29Metals. I could trade this company in the future. AMI, Aurelia Metals, up slightly. I won't have a look at that. A quarterly update. Now, they did issue or revise their guidance, and this was revised guidance downwards. So I'm a little bit surprised the share price has gone up. So I thought the share price would have collapsed, but it didn't. It's gone down. So let's have a look at Aurelia Metals. I'm pretty sure the chart looks pretty good. I could be completely wrong. Yeah, the chart looks pretty good. This is the 1 hour chart for Aurelia Metals. It looks pretty good. I'm pretty sure, is this a gold company? Maybe gold and copper? I could be wrong. It says gold, copper, tin and tungsten. Also silver, lead. So what's going on with this company? The 1 hour chart looks pretty good, and I'm pretty sure a daily chart looks pretty good as well. This is a beautiful breakout. I wish I caught this. The time to buy this would have been back here at about 14 cents. You see the share price going sideways during a 2-week period, and then as soon as it hit the short-term moving average channel, it started to go up again. So I'm not sure. It's interesting. I thought this was a bad report. Market thinks differently. Chrysos, definitely coming on my watch list, down 4.37%. They released their Appendix 4C. Nothing to get me excited just yet about this company. I like their technology, but I need to see the financials. And the reason I need to see the financials is because this company is valued quite highly for a company that is burning through a lot of cash. Now, they were operating cash flow positive, but they spent about $14 million on capital expenditure. So that means they were operating or free cash flow negative by a fair bit. And the daily chart has come out of that downtrend. I was trading this, got out after this little dip in share price back in January. And now I'm just paying attention to the chart because the share price looks like it's going sideways. Market cap of this company is near $800 million for a company that is not profitable and is just barely operating cash flow positive and free cash flow negative. The market likes this company. Now, another reason why I'm following this company a little bit closely is if you look at the 1 hourly chart, it's going sideways. So I need to see some positive momentum in the share price on the 1 hourly chart before I get back into, possibly into Chrysos Corporation. And MAP, Microba Life Sciences, flat. And the only thing to take or pay attention to this company was an increase in cash receipts. Cash receipts doubled or something like that. It was a nice increase in receipts for Microba. I don't know what this company does. In fact, they just talked about they made an acquisition. So have a look at what they do if you want to have a look. There it is, the About section. Precision microbiome company driven to improve human health. Doesn't tell me what they do at all. Okay, so the main reason I paid a little bit of attention to this company was recessive customers, $4 million in this quarter, $7.6 million in the last 2 quarters. So receipts grew significantly from last quarter to this quarter. It could be just a one-off, but still the company is operating cash flow and free cash flow negative. And if we do have a look at the chart, I'm pretty sure the chart looks negative. It has been looking negative for a while, ever since they listed. Let's have a look at the daily chart, not the hourly chart. Or maybe not. Share price is or did reach its high just after it listed. Downtrend, uptrend, now in a downtrend. Okay. So nothing to get excited about. Microba, a market cap 83 million. And I won't have a look at Osteopore. Yes, we'll have a look at Osteopore. Up 121%. Let's have a look at their response to ASX price and volume queries. See if they say anything. Typically, so the market or the ASX asks Osteopore, have you got some news that you have not released to the market yet, which could explain why the share price has risen? Most companies say no. That's question 1. Question 2 is not applicable if they answer no. And then question 3 is there any other explanation you have that could explain the share price and volume action in Osteopore? And in this case, Osteopore says no. There is no other explanation. Now, I'm surprised that Osteopore did not mention they released another announcement this morning. First in human clinical trials begin in Singapore. And maybe the market was reacting to that. And a lot of times, companies will answer or say something in section 3, trying to explain why the share price has increased or decreased by a significant amount. So Osteopore have not done that. Now, the other thing is Osteopore's chart has been quite volatile. This is the daily chart. So let's have a look at the 1 hour chart. You'll be able to see a lot of volatility in this company. So it went all the way up to 75 cents, all the way back down to 10 cents. So up from about 7 cents, up to 75 cents, back down to 10 cents, back up to 55 cents, and now at 37.5 cents. So a lot of volatility, and pretty sure day traders are loving that. And finally, Zoono, up 17.65%. Oh, the market is now closed. We're in the closing auction. Exclusive agent OSY signs in first major supermarket chain. It sounds good. This could be a first step in the right direction for this company. But you'll notice only 15 trades today. So this is a illiquidly traded company. So there's all the trades today. That's all the trades today. Share price, you could have bought this company at 5.1 cents this morning and then sold it at 7.5 cents later in the day. That was the high. So again, just like Osteopore, a lot of volatility, but the difference between Osteopore and this company is much more illiquid, Zoono is, but the chart is starting to look interesting. So I'm pretty sure the bottom has been reached. So a little bit more volatility coming in. Higher volume back in March. The volume has dried up now, but that could be a first sign of a turnaround for Zoono Group. And if you go back through the history of this company, you notice the share price of Zoono Group, currently 6 cents, got as high as $2.50 back in the middle of 2020. This was a COVID-19 beneficiary. They have cleaning products. So everyone was buying their cleaning products. And I think everyone bought way too many of their cleaning products, and they don't have to buy any more Zoono products. There's no more to buy because they're fully stocked up, and they've been fully stocked up for the last 3 years. So maybe that fully stocked scenario is coming to an end for Zoono Group, and maybe the bottom has been reached. I don't know. And I was going to look at the chart for HCW because they're doing a share buyback. So let's have a look at the chart for this company. Oh, gee, no, I don't care. Okay, so obviously, well, not obviously, the only reason the management should do a share buyback is if they think and have pretty good proof that the company is undervalued. That is beneficial for shareholders. I have seen plenty of companies do share buybacks when they would have a hard time saying that. CSL actually did it many, many years ago when I thought, I don't think they could say the company is undervalued. But maybe healthcare Healthco, healthcare and wellness could say that the share price has been under pressure, share price in a downtrend. So maybe this is a good thing. Maybe this share buyback will create value for shareholders in the long term. That's all I'm going to talk about in today's video because it's gone on a little bit longer than I thought. Apologies for the phone calls. Very rarely get phone calls, and I had 2 in one, and they left me messages as well. Left me messages, 2 voicemails from 2 different people. Okay, so that's all I got for this video. Have a good day, and don't forget, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.